All right, let's dive into a topic that keeps a lot of Filipino entrepreneurs up at night: taxes. We're going to break down 5 of the most common, super costly, but believe it or not, totally avoidable tax mistakes that small and medium-sized businesses make. Ready? Let's get into it. I mean, let's be real for a second. For a lot of business owners, just hearing those 3 letters, BIR, can make your heart beat a little faster. You're pouring everything into building your dream, and the last thing you need is a compliance headache. And you know what? If you've ever found yourself in a mad dash in December, surrounded by a year's worth of receipts and just feeling completely overwhelmed, you are so not alone. We call it the December crisis, and it's practically a rite of passage for so many entrepreneurs. But what if we could flip that script? That's our whole goal today. We're gonna pull back the curtain on these issues so you can trade that fear for a feeling of control and actually turn tax compliance into one of your business's biggest strengths. So let's kick things off with the big one, the mindset that really causes that whole December mess in the first place. Mistake number 1 is looking at your taxes like it's a once-a-year problem. Check out this slide, because this is where the disconnect happens. See, a lot of us think of taxes as this big, single deadline at the end of the year. But the BIR? Nope. They're on a totally different wavelength. They live and breathe on a monthly cycle. They're constantly cross-checking your filings, your 2307s, your 2551Qs, with what your customers and suppliers are reporting. So while you're thinking annually, they're looking at you monthly. And that gap, that's exactly where the penalties start to creep in. So the fix is all about a perspective shift. You have to start treating tax compliance like a monthly discipline. It's a habit. Set up calendar reminders for deadlines, keep your books updated, maybe look into some cloud accounting software. When you do that, taxes stop being this giant monster at the end of the year and just become a manageable part of your monthly routine. Okay, let's move on to mistake number 2. This one all happens inside your books, and it's all about getting your business deductions wrong. You know, a lot of businesses actually pay more tax than they have to. And it's not because they're hiding income, it's because they're not claiming all the deductions they're legally allowed to take. For an expense to count, it just has to pass these 4 simple tests. It has to be ordinary and necessary for your business. It needs to be properly documented. You need an official receipt or a sales invoice. And if you had to withhold tax on it, you gotta make sure that's paid. That's it. Nail these 4 and you're good to go. But here's a crucial detail. Not all deductions are a free-for-all. You gotta watch the ceiling. For example, if you make a charitable donation, you can only deduct up to a certain percentage of your income. And for what they call EAR expenses, that's entertainment, amusement, and recreation, the limit is really small, just a tiny fraction of your sales. Knowing these caps is so important for getting your filing right. I absolutely love this quote because it just nails the mindset you need. It's not about asking, hey, can I deduct this coffee? The real question, the one that matters, is can I defend this deduction if an auditor asks me about it? It's all about being prepared. Okay, let's tackle our next 2 mistakes together because they're really intertwined. They're both about your day-to-day operations. One is about your paperwork, and the other is about what happens when your business starts to grow. This one is so common in our digital world. We all use Gcash, we all do bank transfers, and yeah, that screenshot is great proof that you paid someone. But here's the hard truth. In the eyes of the BIR, it is not an official receipt. On its own, it's just not going to cut it for compliance. The good news is, the solution is a super simple 3-step process to make your documents audit-proof. Step 1, always get the official receipt or sales invoice. Step 2, staple or digitally attach your proof of payment, like that Gcash screenshot, right to it. Step 3, just keep it all organized. It's that powerful combination of the official document and the payment trail that makes you bulletproof. And now for mistake number 4, which is such a classic growing pain. Your business is taking off, which is amazing, but you kind of forgot to update the BIR. Your tax registration has to grow and change right along with your business. So what are we talking about here? Well, think about it. You open a new branch, you gotta update them. You hire your very first employee, that's an update. Even just moving your office across the street requires an update. And the big one, the moment your gross sales hit that 3 million peso mark, you are legally required to register for VAT. Every one of these milestones means filing a form, usually BIR Form 1905, and letting your local government know too. This brings us to our final and maybe the most critical mistake of all. This one isn't about numbers or forms, it's about your mindset. It's about responsibility. Let's talk about the ownership mistake. Oh man, how many times have we heard this one, or maybe even said it ourselves? This one little sentence, it sounds so harmless, right? But it has led to some of the most massive penalties for business owners. Why? Because hiring an accountant is smart delegation, but it is not abdication. At the end of the day, it's your name on the line. So you have to ask yourself, which one are you? Are you the delegator who just hands everything over, crosses their fingers, and hopes for the best? Or are you the informed owner who takes the time to understand the basics, who actually looks at what their accountant is filing, and who isn't afraid to ask questions? The difference between those two is everything. And here's the best part. The fix is surprisingly simple. You don't have to become a CPA overnight. You just need to be an informed taxpayer. A fantastic place to start is with your own certificate of registration, your BIR Form 2303. That document is literally the instruction manual for your business's taxes. Know what's on it, know your deadlines, and just get in the habit of reviewing what's being filed for you. So let's bring it all home. We've walked through 5 huge pitfalls, from that last-minute panic to the blind spots in ownership. But the real takeaway here isn't just a list of things not to do. It's about a fundamental shift in how you see all this. Because at the end of the day, this isn't really about avoiding punishment. It's about gaining clarity. When you have true compliance, you have a crystal clear picture of your company's financial health. And that clarity is what gives you the power to make better decisions and grow your business the right way. And that's the question I really want to leave you with today. After hearing all this, just take a second and think about it. Is your business running on the confidence that comes from clarity? Or is it running on that quiet, low-level fear of the unknown? Because the power to choose between those two, well, that's entirely up to you.
Don't let these 5 tax mistakes hold your business back. Learn how to manage your books properly, prepare for BIR audits confidently, and maximize every legal deduction. Enroll in our self-paced bookkeeping course, TESDA-accredited, practical, and made for Filipino entrepreneurs. Learn anytime, anywhere, with guided lessons, real examples, and lifetime access to updates. Enroll at www.ea.edu.ph.